Hello? Oh, I am here. Okay, cool. Let me put on some vibes. I'm gonna do... I gotta do the regular one, so we just gotta play Old Faithful. Alright. And I got my own vibes on here. Okay, let's try this. I don't want that there because... Actually, this again, I don't mind. This is what I'm used to, right? So we need to record some data. What should we talk about, man? Like, I just go through the chart, but I don't want to seem all willy-nilly about each one of them. I need to kind of make it... I need to make it... What is it? I need a notepad. Another notepad. So we got to do intro. After the intro is the what stock ticker. What else do I need to tell? Float. It's the most important freaking thing, man. Market cap. What else is important when we talk about stocks? Inside our own, no, institutional ownership. Okay, then we need to break down the... Nope. Then we got subsection of this is going to be today's. Today, and we need today PM high, PM consolidation, PM low, right? And then we need to do intraday. No, we need another one. We need to go ID? Would it be ID? Little I, big D? Oh, that's good. Intraday high. Intraday consolidation. And intraday low. I need to note the times of each of these things. Right? So that's what we talk about. Reason. So we need to chart tell us resistance and support levels. And then how to trade. I like it. Okay. So the intro, we talk about the stock. In the stock, we talk about what it is, why it did what it did, why is the news. Yeah. They taught me this in school. Okay, note the times of each things. Then you have a intro, you have a what, you have a why, so you have the reasoning, so you have news, or not news, catalyst, yes, No. Chart to tell us resistance and support levels. How to trade. So you have the what, why. Then you have the how. How did the what do the why? How? The stock trade. Show chart. Show chart. Stock. Where's obviously the market that's implied? When is obviously implied for today. What, why, when, how, where. Is that all of them? What, why, when, how, where. I think those are all the questions, correct? So the where is implied, stock market. When is known, because it's today, it's known. Okay, what? All right, intro. Intro needs to include, the intro is the where. Haha. That's awesome. Intro is the where. Where? Where are we at? So, market. Date. Where are we at? Review. Okay, so we have the what? No, we have the where, right? The where is in the intro. The where and the when are in it together. Where and when, right? So the stock market today. Yes. What are we talking about? Why did it happen? Why did the thing talk about what we're talking about? And how did it happen? So then, after you figure out how did it happen, how can you trade this pattern next time? Got it. So that is the exit or the takeaway, right? No, that's the takeaway. It's not the exit. It's not the outro. Takeaway. Thanks for hanging out, chilling. I'm working on basically an outline for these videos I'm about to make. So I'm going to be creating some really short, quick videos that I'm going to obviously do live. That's going to talk about the stock market today. And I have a handful of tickers, actually. I have quite a few tickers. I took a couple off on accident, but I remember what they are because I traded them. So I'm going to go through a bunch of tickers that I saw move today and did different things, and we're going to recap kind of like the bigger market. But each time I'm doing that, I'm going to record and basically do the same thing multiple times like a crazy person, because I'm recording all this live in one take because I really can't put out these videos fast enough. I really want there to be a recording of historical data on the thoughts or the recaps of how a stock traded. There's a bunch of actual data points you can get, like individual data, but getting people's opinion on how a particular pattern traded, regardless of the name, right? So everybody calls it by different names. Some people can call an ABCD pattern a stair-step pattern, I think is what it's also called. Or I don't know. Like you can have the same name for a pattern that somebody else sees as something different. So basically, I want to record the date that the ticker happened and the movement of it, the price action, based upon its current resistance levels and the current thinking of a trader. So if I go back and I look at this stuff, it's kind of like a video diary for me to be able to remember how I traded something or why I traded something in a certain way. So yes, I can put all this down on paper, but yeah, that takes too much time. I can just talk. I talk a lot faster than I can write. Sometimes it's not even for the better, but however, it allows me to record it. All right. So it's late. I'm tired. It's 9:07, and I've been up since 4 in the morning. Actually sitting here at 4 in the morning. I did take a break throughout the day. I went and got some food. I went to the park and went for a nice, awesome walk. I did some great yoga. But these lights are really hurting my eyes. God. Okay. We'll have to fix those later. We'll have to fix them later. And I checked levels, but it looks like I'm loud. I don't even see the background music playing because it's not. It's muted. There's the background music playing now. Maybe. It should be there. I hope it's there. You know what? Rather than hoping, let's just open up the Twitch feed and see. Because that's going to be the clearest. It's going to be as close to the actual thing as I'm doing. Okay. You can hear my actual music here more than you can hear this music on here. So I got to fix that. More than you can hear this music on here. So I got to fix that. More than you can hear. All right. So I just unmuted myself. So let's see if I can hear myself. All right. So I just unmuted myself. So let's see if I can hear myself. I know that didn't make any sense, but I had to talk to myself just then because it would not have made any sense at all to what I was saying. All right. So what I did is I fixed the audio. I fixed the stuff. And I think we're good. It's really cool to see myself like instantaneously right after I just did something. All right. And I don't like the shadows. Yeah. Okay. So, let's do this. Let's run through. So we got the where and the when. All right. Ugh. 1, 2, 3. What are we doing? What was my list? I have to do this in 2 parts. So I need to have this here so I know what I'm saying the whole time. What did I trade? I traded clove, right? I think I traded clove. I did. I traded clove today. So let's put this on the 5-minute chart. Just see what I did and what time I did it at. And then I traded FBIO. And then I traded... What did I trade today? AMBO? Oh yeah, I traded AMBO. I traded GameStop. I traded a lot today. Let's put them all up here. So the things I traded. So ENZC, ENZC. Yep. So things that I traded. I'm going to start here. So GME, AMC. So now I'm putting on my watch list all the different stocks I traded and watched today, so I don't have to jump between screens because that would slow this entire live stream down. And I don't want to slow it down because I want to go to bed. Because I want to come back tomorrow and be fresh and awake to do this whole thing again. Alright, so the main ones we're talking about are, we're going to start with this direction, so we'll start with this. Alright, AMBO. Very crazy pattern AMBO. Okay. So we're going to hit the record button first, right? And then we talk about the day introduction, outro, takeaway. take away, exit, thank you, Discord, live stream times. Okay, I'm going to say the same thing a lot, and that's going to drive me a little nuts. And I want to program, what is this button program does? That's just talk, that's be right back, what is this? That's group talk, what is this? That's group, okay. I got to reprogram my Steam Deck. It's the same button. Oh, I was muted. That's super fire. Nope. That button. And then this button. Yes. This button. And this button. And this button. And a smile. And then Q. And then unQ. And then back to this. Okay, cool. See what I did there? See what I did there? Okay. This. Where am I at? Here? Here. Okay. So what am I talking about? 5 tickers. All right. Oh, there's no recording button on this screen. I have to go click up here. One fault in my plan. So I can do this as a hold place. And then I can go record like this. And be like, hey, see? It works. Okay. What's up? Now I'm going to talk a little bit more like I'm actually talking to you instead of talking to myself working on this stuff. So today is April the 19th, 2021. Stock market's insane like it is every day. And what I'm doing is I'm recording all of these because I want a video log of how the actual thing traded, because you can put data points on there, but until you can kind of see where the resistance levels, support levels are in the mind of a trader and how people think, it probably won't stick the same as just seeing numbers on a page. So what I'm going to do is I'm going to actually go over some of these stocks and how these move today. This one in particular is AMBO. So AMBO popped up this morning, all right? And I mapped it out, and I was like, I don't really like it. There's not enough range on it. You can see here that it came from $2 to, I didn't even mark it out because it wasn't that important to me. Let's mark it out. It came from, let's just do the green ones, $1.97-ish to up to $3.19. So it only went up $1, which doesn't leave a lot of range. And when I say range, I mean like actual availability to move far up and down. And the other thing I need to pull up and show you is, I like to pull it up on FinViz actually. I have notes. Is the float. The float of this is 2.35. There's only 1% institutionally owned, which means the institutions can trade their stocks in the open market while the insiders can't. So it is important to know that there's an 85% of the actual float is controlled by the institution. I had mixed data on this. I did see some places where the float was showing up as higher than 2 million. I think it was 23 million I saw, but I was acting as if FinViz was right, because you kind of have to pick one source and stick to it if you're going to follow your data, because you can get multiple different data points. The only true way to get it is if you go to all the SEC filings and you're pulling your data straight from there. That is the most accurate source to my knowledge. But then again, that can be updated every day too. Anyways, second part, market cap is 62 million. Why is that important? Obviously, that's for float rotations. So we'll talk about that later. I don't have time to get into that now. But anyways, knowing or seeing that it was 2.3, I didn't really want to do much with it because it was terrifying to me that it's that low. So I was kind of more long biased in this. I was really rooting for the longs to take it high. Pulling up the daily chart here, you can see that in my personal opinion, it wasn't going to hit a supernova. There's a long history of failure, and that doesn't leave for blue skies or buyer confidence or, yeah, you got the drift, right? all of those. So I'm kind of looking at this for the past couple years, and I couldn't even really zoom out that far before it started looking crazy. You zoom in a little bit. This is 2015, which we see cleaner charts than this that don't have this massive split happening back here. So I'll talk about that later, and I'll talk about that now. So I was treating this kind of like there was this massive uphill resistance, like climbing a hill and it's all mud. Doesn't really work. Or climbing a hill, it's all sand and it's like a half pike, it's backwards, falling on you. So this opens up, and this morning I watched it in the pre-market. It shoots up. I'm like, okay, great. You know, maybe it'll get to 250. And it goes, I'm like, okay, well, I missed my long because I was looking at it down here in the 230. So like, okay, whatever, I missed it. It's not going to go much because based upon this daily, look at this thing. It's gross. It's like last year, failing. What? That's so many bag holders that are just caught all up here, then it just fails down, then it has one big massive day that always traps people, 20-30 cents, and it's not that big of a trap. Like, think about it. It's 20-30 cents. Like, I know what you're thinking. It's 20% though. It's 10%. That's a big drop. Yeah, but it's 20 cents. Is it really a big drop? It's not. Anyway, so you got bag holders. You got people everywhere. And, you know, there are definitely people that are like, you know what, I bought on this, I don't believe it anymore, I want to get my money out, put it in Dogecoin, because Dogecoin seems like it's going to the moon. And that's what they think they're going to do. So we got resistance stacked everywhere in the stock, so I didn't like it. So it opens at about 197, and it goes up, and it staggers in the morning. It does this ABCD pattern that it continues to try to just stop people out, right? When was this? What's the bell? There's the bell. Bell rings. Straight up. Okay, cool. You were struggling all morning long with that consolidation right there, which is only 10 cents away as well. Like, you see the struggle points, right? Like, I need to put these here so you can literally see this stuff. Look at this. 10 minutes in, right? Oh, I'm sorry, 20 minutes in, it hits that level. 10 minutes in, it couldn't touch it. Consolidates right above it. Okay, you're thinking, but look at that candle. What? You mean the 280 that hit once and gave false hope? Or you're thinking like the actual range most people saw for those 5 minutes was between 270 and, we'll be generous, 264. So 5 cents. So you got bag holders. Like, you got bag holders that are becoming new bag holders because they think it's going to be super dope. And then you got the old bag holders like, sucker. Anyways, so that's the high. Technically, you can call that the high. Whatever. We'll call 279 the high at the pre-market. So it starts selling off. Then you get short stuck because shorts are like, hey, look, it's going down now. It's definitely going to go back down to 220. Why? Why would it go back to 220? Can't answer that question right now, but I'll show you in a second. So it doesn't go back down to 220. It's a long. It goes shoots up, right? Then you're thinking, okay. Then it's hit by another big short. Goes back down. Then guess what? It bottoms out. And goes back up again. And it proceeds to do this for the first, hour of the day? Hour and a half of the day? Maybe hour 15 minutes to be generous. Important things to note. Some of the stuff that I live by when I'm shorting now. And I live by this because I've been messed up so many times if I'm working on an intraday trade. If it goes above the pre-market high, you have a 70% roughly chance that it's going to hit pre-market highs. Roughly. And on the drop back down, eventually, you have about a 70% chance. I found. You have about a 50% chance that it hits this pre-market consolidation. About a 50% chance. And then you got like a 20% chance that it hits pre-market lows. And then you got like a 5 and under percent chance that it goes back down to where it started from. It is possible. I've seen it. I saw it last week. They're rare when you see them because it's just like, wow, this thing lost all hope. It doesn't make sense if there's a news catalyst. If there's not, I've still seen it happen. It's really odd when it happens, and it's like the outlier. It's like what you always want to have happen, but you never get it. You know what I'm saying? Like, it's that thing. Like it gets back all of its gain and it was up 90% and you made a 90% return on your short. Yeah, that thing, it happens once in a while. It's a unicorn. Anyways, so look what happened here. Goes up, pre-market highs, can't hold, goes down. Pre-market consolidation, 50% chance. We're thinking, great, that's awesome, 50% chance that happened. Yeah, on 19 cents. 10% movement. 10%. Not even 10% movement. Okay? So then what happens? It rebounds because dip buyers, oh, it's too low. Look where it is. Sends it back up. Where's it go this time? Well, it holds at about 10 cents higher than it did before. Then what happens? Goes back down to that 50% chance mark. You see what's happening? The people that know about this continually play that game. They're like, oh, wait, this is 50% chance. I'm taking my money out. I short this, I'm done. And then also for longs, they're like, I have a 50% chance of making this thing bounce back up. Because it's the same inverse. You get that, right? Like it's the same as the inverse. You have a 30% chance of this happening, or you have a 70% chance of this happening. It's the inverse factor. So what happens? Dip buyers. Dip buyers this time, they're targeting that 299 level, and they're thinking if we take that out, we can make these shorts stop, because these shorts are thinking, it's only 10 cents. I'm going to hold it. This is stupid. The chances that it's going to even go up to these resistance levels, I'm going to hold it. The correct shorts know this, but the correct shorts aren't even playing this thing. Like there's no range. We talked about that in the beginning. Why would a short seller hit this thing? They wouldn't. So what happens? Goes back up. Goes back up. Runs into 320. 320 is important because it barely breaks through previous day high, but not previous consolidation. So it runs into the previous consolidation, which is 320, right? And it can't go any higher. Basically bottom of February 12th. Check this out. It's done. Breaks its consolidation at the top, 15 minutes. Starts going down. Keeps baby going down. So you have some shorts that aren't just believing that it's going to go and they keep stopping out. It just goes. Consolidates where? The 50% chance mark. Then what happens? It fades down to the 20% chance mark. Right? Pre-market lows, which is down here. And then it consolidates between that last channel all day long. Never hitting the lowest spot. Look at this. Never hitting that lowest spot again. It's pretty dope, right? Look at that. What number is this? 234? 232? Wait, that's not 232. What is that? 234. All right? No. Can't be 234. Oh, yeah, 234. 237. 239. And 241. So its first drop was the final drop with most shorts in it. Then all the other shorts didn't hold. And they all sold throughout the rest of the day. And it finished, check this out. Right there. 261. Which is roughly halfway between $2 and $3.20. So it finished up roughly 50% on the day. 42%. Look at that. So you had a 50% chance of playing this if you top ticket. You had a 50% chance of winning this if you bottom ticked it. But you only bottom ticked it if you started it. How nuts is that? Think about that. It's crazy. Anyways, there was a catalyst on this today. It was expanding with Amazon for some artificial intelligence training for teachers, something. It wasn't very important. How do you trade this next time? Like, if you lost money on this, I'm sorry. Like, there wasn't enough range. You needed to take it higher. So the proper thing to do Like the only thing you could have done to really play this better long, right? Seeing the resistance levels, like understood this daily. This daily chart's hugely important. When you understand this daily back here, even how the most of it topped out throughout the rest of the time, you'll see that obviously something is wrong at that level. And if something is wrong at that level, chances are that something's going to be wrong at that level again. So don't be the guy trying to take it above it. That's all I can tell you. Like don't be that guy trying to take this thing higher, because it ain't going to work. And it didn't. If you're playing this short, the correct way to play this would have been the only way answer is get in at the 50% mark as close as you can, as early in the day as you can. Early, not late, early. Early meaning, put a number on it, the bell. How about that? As early as possible, as farthest away from resistance. That's your best entry point. Where are you targeting? Well, you're watching level 2. You're trying to go with the flow, and you're keeping in mind those key levels. High of day, previous day. Consolidation low of previous consolidation daily run. And then the high, just same thing you look at on the intraday, you're looking at on the daily chart itself. Then you get out. Shorts, where do you hit this at? It doesn't matter where you hit it at, you need to know your exits. Because if you hit it the best impossible, which you won't even really know, because you can shoot for the top, but if you're wrong, you constantly get stopped out, which is what most of you get screwed up with. Or if you're waiting for the backside of the move, you could be waiting way too late for way too much confirmation. So to tell you what you should trade this with, you should always keep your exit in mind first. Where's it going to go? 70% of the time, it's going to go to the pre-market high. That's what I see, but you could see something different. So obviously you want it farthest away from that number as possible, right? Technically, you want that farthest away. And then you want that confirmed as your entry point, because you want to hit that 70% chance of the mark 100% of the time. Even though it's 70% chance of it happening, you need to know that you're going to shoot 100% of the chance of that and still pass the class, 70%. You can also then hold on to some of your size to wait for the next two exit points. Next two exit points are the pre-market consolidation and then the low of the pre-market. If you wait for both of those, you leave a little bit of size there. But you don't enter too close to those numbers, because there's not enough range. Shorts, you have to remember, if you're shorting this, you probably have an additional fee. It's either going to be paid through on the locates for themselves, or if your broker doesn't force you to do that, it's probably somewhere hidden in your other fees that you have to pay for every month. So that has to be calculated, right? So if you're thinking this is a 2-cent short and you're going to make a 10-cent move off of this thing, you better do that 10-cent move 100 times. Think about it. It ain't worth it. That's a lot of work. That's a whole lot of work. Wouldn't you just rather sit back and let it run it up? Run this thing to the moon, y'all. Then on my short at the top. Next resistance point, $6. That sounds good to me. I mean, you guys can go play with these low numbers. I'm going to go from 6 back down to 4. That makes more sense. So to short this, that doesn't make much sense. So if you lost on the short game on this, I'm sorry. If you lost on the long game on this, I'm sorry. I did too, actually. I broke one of my rules, and I held a little bit too long on the long side. I did. Bummer, right? It happens. Did I lose a lot? No, because I went in with smaller size, because I knew what I was doing was also risky, so I was really managing risk, and I had a set target in mind that I was willing to lose. And lucky I didn't even lose that. So that was AMBO today. I think the only way to trade that thing was with what I just said for the last 5 minutes. If you see something different, then super cool. I hope you didn't lose a ton of money. I hope you found this informative. Thank you for watching this little short video. I know I talked a little bit too long. It's about a 17-minute video. Link for Patreon, Discord down below. Live stream times down below. We're here streaming most of the market day. It's really slow right now, so you got to bear with us on some of our stuff. We don't really have too much to talk about. We're working on that, but it'll get better with time, y'all. When the market heats back up, it'll be good. It'll be good. So that was AMBO. I'm going to actually end this video